Hey, this is Sasha. Thanks for joining me in today's video. What I want to share with you today is a quick insight to our options membership and what it's all about. So this is a little clip put together, cut from different segments of the options membership class and session that we ran not too long ago. So again, it might be a day or so old, but I'll give you an insight on what the options membership is all about. Now, enjoy this clip. If you're interested in the options membership, go ahead and take a look at our website at tradersfly.com. You can go here and you can go to the membership section. That will link you up to our membership website. And once you're here, you can go ahead and take a look at the option ideas and strategies. And this is what it's all about. You'll get a sample clip right now, and you can also learn more insight right here. And there's also a couple of sample videos as well right there. Now, for watching this video, I will give you a little bonus and discount. And what you can do, I'll just show you right here. When you scroll down, if you're interested in signing up, you can type in the coupon code, share the love, do it all together, and you'll see apply the coupon code. It'll give you, I think it's 50% off the first month. So off the first month, you can get the first month half off, and then it'll renew. And if you're not interested, of course, you could just go ahead and cancel before that time is up. So that's a little bonus for those of you that are watching this video. Keep in mind, if you're watching this video 6 months later or a year later, the coupon code may not work. So understand that coupon codes do expire and they do change. And in that case, if it doesn't work, it doesn't work. So anyways, one other quick little bonus is remember that if you go to the Traders Fly website, go to the Getting Started page. There's also an Options Trading 101 for those of you completely brand new to options. Anyways, enjoy the clip. I think you'll get a lot out of it and seeing what our member section has to offer. I want to go ahead and do maybe another protection idea for you today. So we're going to go ahead and, there's been a lot of earnings trades and that kind of stuff. But let's do another protection strategy. I am going to do this on the, why don't I do it on the SPY? So something a little bit different. And we will go in and just to show you, we'll do a back ratio spread. And we will do one, I will do one probably, let's go about 20, 25 days. If I go too tight, there might not be enough time because I don't know when the market's pulling back. I know eventually you'll probably get a pullback, but we keep grinding higher, so who knows? So I want to give myself enough cushion. I could go somewhere around 22 days, 25, 27, 29, somewhere around that range. If I go like too far out, it may be not worth the cost because it gets more expensive. So again, a little bit of a trade-off. So let's say about 34 days there. Okay, so let's go in and do a back ratio spread. And I'll do kind of like a 3 to 5 contracts. You could do a 1-2 spread. That's the basics of it. But a 3-5, the ratio is different, right? Because if you go 1 to 2, you're kind of doubling up your contracts. If you're going like 3 to 5, it's a little bit of a different ratio. So this is called a back ratio. So what you do is you sell one and then you buy one. So the one you sell kind of helps pay for the 2 that you buy. And here's kind of the way that it's going to look, just so you get an idea. Is that really if the stock stands still, you're not going to lose or put up a lot of money. Let's say $152 for insurance. So if you're dealing with like a $10,000 account, that may not be too bad. The big issue with these types of spreads and strategies is that if you get kind of in here and you wait, let's say half the duration, that line will be down here. But the whole point is that when this explodes downward, you could be way up here, and that helps compensate for some of the other losing positions that you may have. So think about this as you have like, let's say 3, 5, 7 positions on, this might be a good kind of thought process. So here is a 3 to 5, and you can see with a 3-5 spread, what happens is now instead of losing 150, I only lose 50 because the ratio, the rate of them is a little different, right? I could go ahead and sell 4, right? And that gives me even more money, but that also means what is the trade-off to doing that? Well, I get more money if it stands still or goes up, I'm fine. But the downside is I'm risking more, and it takes, there's more range in it that it has to move for me to profit. So again, there's give and takes. It's not that one is better, but if I go to kind of 3, it moves a little bit quicker. So kind of pay attention to the delta here. One is delta of 39, one is delta of -6. And I kind of want a negative delta because I want it to, you know, make money from a downward move. But I don't want to lose much if it does keep grinding higher. So this could be an interesting spread, and you're only paying 49 cents. And if it does tank, let's say black swan event, boom, then it's possible that you could go ahead and make quite a bit of money, but it does have to then, you know, tank. So these are good little cheap strategies to put on for protection. You know, and if you're trading a little bit larger, let's say, because this is SPY, if you did this on the SPX, you'll do 1/10 the size. But if you're trading a little bit larger, let's say you did kind of like a, right here, a 15-10 spread, you can really tune in on some of these ratios on how much angle or elevation you want. So if you're willing to just kind of risk a little bit, but keep in mind, you do have a loss in theta right here. So that is a bit of a problem sometimes, is that you will have a little bit of a loss in theta, because you can see even here at the beginning, 5-7 days into it, you'll be losing money. But the point is at expiration, right there, if it keeps grinding higher, you're fine. So that is one key problem. So what we can do is we can go ahead and put this strategy on right here. So I will go ahead and let's pop this on right here. We'll just put it on in this account. And then what you can also do is right now, this is going to get filled eventually. What you can aim to do is try to get filled on another spread to help compensate for the theta loss. So here I'm basically losing 66 in theta. So how do I cut my theta? I got a theta problem. So how do I cut my theta? Well, why don't I now overlap it? Because you always look at what do you have on hand, and now what can I do to go ahead and minimize that? Well, why don't I go ahead and do a shorter duration to help pay for that theta? Maybe around a 13, 14 day, 15 day. Let's go 15 because it's got a lot of contracts here that'll be traded. Why don't I just go ahead and buy an at the money butterfly right away to help cushion for that, and that'll help pay for some of that spread. Now, I probably won't get as much theta to pay for it, just because the other position is just going to be that much larger. But hey, if you can cut your theta problem by a little bit, that should be pretty good. All right. So that's what I'm looking to really do with kind of this spread and strategy. And I don't want to lean it one way or the other. All I'm trying to do is just kind of balance it out. And because it's a shorter duration, about 2 weeks or less, I want to pop this side up. I don't want to lean these negative deltas as much. So what will I do? I will go ahead and kind of pop that one leg up, or even another one. I just want to be neutral. I'm just trying to get some theta to help pay for that. And I could just do kind of, let's just go, I don't want to do too much, because remember, this now increases my price quite a bit. So let me see if I bring this in. I just don't want my wings to be too wide. Bring the wings in a little tighter, and I'd rather just do a little more contracts. Okay. And that way we reduce the volatility exposure. So here, okay. So now what I want to do is just look at my theta. I've got about a 24, 28, 30 theta. So that cuts your theta in about half, because right now this other one, I've got a 65 theta. So hey, that stinks. So how do I pay for it? How do I make up for my theta? So I could do something like this. And now what I've got is I'm going to create a spread that's similar to this. I'll still have a negative theta. I'll still have that negative theta, but it'll be a lot less. Okay, so there you go. I hope you got a lot out of the quick little clip video. Keep in mind, this was just a basic cut video. If you remember, you get the full video length and access to the whole clip and the whole class and the session that we ran. Some of these sessions are a lot longer than others. So if you go ahead and you're wondering how long the length is, you can see that, for example, that one is 38 minutes long. This one's 39 minutes long. This one might be 17 minutes long. Some are 42, 26 minutes. This one's 9 minutes. So they're all a little bit different. It just really depends on the session and what we're doing and what we're talking about and the questions that we get. So some sessions are a little longer than others. Hope you join us. Go ahead and go to our website, tradersfly.com. You can start there. Go to the members section, and then go to the options, ideas, and strategies. You can also check out the start here, the getting started page. If you're interested in getting some freebies, we have some freebies there that also got released. So you can download a bunch of great freebies. coaching sessions, and other great resources. Thanks again, and I look forward to seeing you in our options membership. If you're brand new to the YouTube channel, be sure to hit subscribe here by clicking the link right here, or get some of those freebies by clicking the link right over here and getting on the newsletter list, so that way you get notified as we release other courses, freebies, and live sessions. Thanks again, and I will see you next time.